All right, let's talk the broader picture at the moment, globally and currencies. For his thoughts, Pete McGuire joining us from XM. Pete, terrific to catch up again with you. So we're looking at the overall macro picture at the moment. Of course, inflation remains very much front and centre. Just talk us through how you're looking at the US dollar at the moment, its movements.
Well, good afternoon, Andrew. I'll tell you what, it's sitting at about 95.2. So it's had a fair bit of movement over the last, 3 to 4 trading sessions, and it's been choppy. Let's see what happens over the next matter of weeks leading up to February and naturally Lunar New Year. So I think it'll just be, whipsawing around. Maybe you might hit a 94.9. So I think it's, choppiness is going to remain. That's probably leading up until the rate rises. And if March is the kickoff date, then I think it'd probably strengthen a little bit then. But at the moment, I feel as though it's going to be whipsawing and not a bad market to trade at all.
Yeah, as a result then, how are you calling the Aussie dollar and the Kiwi dollars?
Well, Aussie dollar sitting at 72, Andrew. I think it's, again, looking at those numbers coming out as far as China, they really hit the ball out of the park a couple of minutes ago. I got that read, 8.1 for GDP for China for 21. So, and Kiwi dollar might strengthen a little bit as well. So I wouldn't be surprised to see both of those head up a little bit higher in the short term. Great markets, if you're looking at what we've seen in the last year or so, huge volatility. And again, keep your hands on the wheel, but there's plenty of price movement, and that's what a trader's after, Andrew, movement.
Absolutely. Well, let's go to China. Pete, yeah, as you say, those figures just coming to us. I'm just trying to get them up at this point. But what are you, so 8.1% GDP.
It's strong, Andrew.
What you're seeing. Yep.
Yeah, I mean, I think that's hit everyone by a little bit of surprise. Certainly hit me by surprise. I wasn't expecting that sort of number, but that's very, very strong. So that demonstrates the robustness of their internal economy, export driven, and you've got to say, inflation certainly globally is strong, and the growth coming out of China puts everyone with a little bit of a wake-up call. They're very, very solid, and naturally, how does the US, where do we see their numbers going in the next couple of weeks? And everyone reporting in as far as growth numbers for 21, or certainly for the final quarter. So it seems to be onward and upward. Omicron taking a backward seat, and growth into 22 could be very, very robust. Again, that'll be supportive of equities. And the storyline, I think, Andrew, is going to be reasonable bullishness this year, and not a bad time to be not only in the market, but watching all of those moving parts of the market.
Yeah, of course, the assumption is we should be waiting until after the Winter Olympics next month in Beijing until we get an accurate picture of where China is going, particularly as far as policy is concerned, that they'll actually, turn off those restrictions they have, just in particular as far as trying to keep pollution controls in measure. Given you've just had that GDP read there, Pete, how are you looking at the PBOC and what it's likely to do then?
Well, I wouldn't be surprised to be a little bit more supportive as far as, and I just read a quick note on that also, as far as loosening and making it a little bit easier for the consumer over there. So I think that they've got to stimulate the internal engine a little bit more, and I wouldn't be surprised for that to take some shape. And overall, it's looking reasonably strong. And when you put your mind across all of Asia, Andrew, Asia and India contributing the best part of, I suppose, 3.5 to 4 billion people, it's a very strong growth engine at the moment across that whole Asia basin. So strong numbers, strong GDP, and, enormous growth.
Let's stay in Asia, Japan. Pete, how are you reading the economy at the moment? Is it moving in the right direction? Of course, I was just taking a look at the unemployment rate down to 2.2% there. Look, clearly there's not a lot of room to move just as far as that's concerned. But how are you reading Japan, and I guess where the yen's going?
Well, from a confidence side, Andrew, the Tanken report is looking reasonably very, very confident and very strong. So there's a good point. Unemployment, as you mentioned, at 2.2. The yen, I can't see them raising rates at any time soon. Inflation seems to be very much under control, and they probably need to nudge it up a little bit. consumption remains weak. That's the great issue as far as internal consumption for Japan. Wage growth is anemic. So you take on board all of those parts, and then we think, well, what's happening to the consumer over there? A little bit fragile, and maybe that yen is again whipsawing and range bound. We've got a number there at the moment about 114.50 for the yen versus US dollar. So I wouldn't be surprised to see a little bit further weakness, but it's going to be a great trade. Yen's always a standout and offers big swings. So yeah, hold on to your hat for the yen.
Yeah, and I guess particularly when you measure about what's going on elsewhere around the globe with most central banks looking to lift rates, the BOJ obviously not. So
it's that divergence exactly. And
yeah, right. Yeah, but so how's that?
As you said,
go on. You go.
Between the divergence between when you think about Japan, when you think about Switzerland, these negative interest rate economies, and then you've got the big behemoths, and you've got the US, you've got Bank of England, and all starting to ratchet up. So there's the story, and again, what's happening with the euro. So I think that we're going to see 22 is going to be a standout for currencies, and that's where I think that there'll be a fair bit of action. And I wouldn't be surprised for that volatility to remain over the first 3 to 6 months of the year.
Pete, we got there in the end. Terrific stuff. Thanks for joining us from XM.
Good to see you, Andrew. Thank you.